second round of stimulus funding for the PPP and EIDL loans was approved, which will probably run out even faster than the first initial $349 billion, mainly because the banks are already filled with PPP applications from the first round that are still waiting for acceptance by the SBA. But what is different this time around is that out of the $310 billion allocated in replenishing the PPP and EIDL loans, $60 billion of that is exclusively reserved for the small community banks and credit unions, because it is thought that they are going to be better at finding the true, authentic small business owners. So having said that, I think that a lot of people are going to see a lot more success if they submit their PPP application through a smaller bank, because not only do smaller banks have a play at the entire $310 billion, they also have more availability to fund the PPP loans. Whereas the big banks are going to prioritize their bigger small business clients that are getting millions of dollars in loans, so the $250 billion that the bigger banks have access to is going to run out a lot faster. And just as Matt Sorensen said in this article, it is probably going to be the $60 billion that is going to be left around for a couple days longer at the smaller banks. So if you have your application and if you are still in the application process for the PPP and you submitted your application through a big bank, it doesn't necessarily mean that your application was submitted, because you may have just gotten approved internally by the bank, but in reality you may be behind thousands of other people at that particular bank that are also waiting to have their application submitted to the SBA. Whereas if you go down to a smaller bank, they may be able to submit your application right there on the spot immediately. So if you are still in the application process, or you haven't even had a chance to submit your PPP application yet, I would do that as quickly as possible, because the funds are running out and it's not going to be available for very long. And I would definitely go down to a smaller bank to submit that application. And I wouldn't even worry about the fact that I wasn't client at that bank, and I wouldn't worry about pulling my application from a big bank, because whichever bank calls you back first that you got approved by the SBA for the PPP loan, then I would notify the other bank immediately that I already got approved. Now, before you submit your application to the bank, you have to make sure that you have your 2019 Schedule C completed, because that is going to show you what your net income was, and that is what the banks want to see, because that is going to help them determine what your PPP loan amount is going to be. Now, 95% of Schedule C business owners do not have any employees, but if you do, you can add to your payroll of that of your outside people. But if you are a sole proprietor and you did not have a very big payroll, or you netted less than $40,000, then the PPP shouldn't even be your primary focus, because let's say a sole proprietor netted $40,000. The bank is going to divide that by 12 and multiply it by 2.5, which is going to give them $8,333, and that would be that person's PPP loan. So for that amount of money, it may not be worth the fight, the stress, and all the paperwork, since you can get a lot more money on unemployment, which has extended its access to self-employed individuals, independent contractors, gig economy workers, and it has extended its coverage from 26 weeks to 39 weeks. And depending on which state you live in, the weekly state benefits range between $200 to $550 per week. So I would just look up the weekly benefits for the state that you live in. And on top of those state benefits, the federal government has added an additional $600 per week that is available for 12 weeks once you go on unemployment, and that is in effect until July 31st of 2020. And a lot of individuals are getting close to $1,000 per week. Now, if you try to apply for unemployment and got denied, but you know that you qualify under the new provisions, just keep going back and talking it out with the state. Now, going back to the PPP, the problem is that a lot of people think that they're going to get a lot more money than they really are. Also, receiving the PPP is only one part of the process, because the second part is the forgiveness, on which more guidelines are to come from the SBA. But what we know so far is that from the day that you receive the PPP funds, you have 8 weeks to spend that money, and you must spend at least 75% of that on payroll. The rest can be spent on rent, mortgage interest, utilities, or other debt obligations inside of your business. But what if you are located in an area that has a shelter-in-place order? How do you get the most out of this PPP money for your business? Because whatever money is left over after the 8 weeks or is not forgiven turns to a 1% 2-year loan. Now, going back to the unemployment, you can run the numbers for what you could possibly qualify for unemployment in addition to this next strategy, which is the employee retention tax credit. What this credit is that you can receive a credit up to $5,000 per employee that you pay up to $10,000 or more from now until the end of the year. And when I say tax credit, I don't mean that you can get this tax credit sometime next year when you file your 2020 taxes. This is a credit that you can request an advance payment from the IRS as long as the credit that you're eligible to receive is greater than the quarterly federal employment tax. And if you also had qualified for the PPP, maybe it makes sense for you to take that instead, or maybe go this route. But all of this is strategies that you should bring up to your CPA and figure this out. And the other strategies that you could take advantage of if you are going either the PPP route or the Employee Retention Tax Credit route are the Family Medical Leave Act or the Emergency Sick Leave. If, let's say, you have your S corporation, you have yourself as a W-2 employee, you have your spouse as a W-2 employee, you have your kids as W-2 employees, you could have them take advantage of either one of these strategies, or you could fire your spouse or your kids so they can go on employment, or you could have a combination of both of these strategies. And if you do not have any family members on payroll and it makes sense for you to hire them, especially if you are going the PPP route, where one of the requirements for forgiveness of the PPP loan is that you retain the same number of full-time employees, which also part-time employees count. And if you have a few part-time employees, it would add up to full-time, because I think they're looking at the hours. Then it may make sense for you to bring on family members to increase that employee count so that your PPP loan gets forgiven. If you are going the tax credit route, then as soon as the shelter-in-place order is over and you start getting your business back up and running, you may need some extra help, and you may want to bring in a family member onto your payroll and hire them to help you. And then when you pay them, you could get the tax credit back. And the last part that I want to go over is if you had applied and you have a great possibility of getting, or you have gotten the EIDL. So if you are getting specifically the grant portion, which was $1,000 per employee, then if you are going the PPP route, the way that affects your PPP forgiveness amount is that whatever the EIDL grant amount is going to be subtracted from your PPP loan forgivable amount. So essentially, whatever amount you get from the EIDL becomes a 1% 2-year loan. On the Employee Retention Tax Credit, if you take the EIDL, then it acts as an addition. So that is also something to consider and take into account.